Hey, I wanted to make a short video on a trade that I took yesterday on Carrier Global Corporation, which is a CARR, and explain you what is the rationale or why I took this trade yesterday. So what you will see here is that CARR has been moving to the upside in a monthly chart very nicely from actually around $12 all the way through 37.70, which is the price that that closed yesterday. And in the weekly has been moving also very nicely. On 5 weeks ago, it moved after this earnings release, moved all the way all the way to this area here, which is $39 around that price. So this is the pull of the bull flag all the way up to here, and then it's been retracing in the last four weeks. So you will see that one in the daily chart up here. This is the pole go all the way up and then started to go down and consolidating. So now that it's close to the 30 days moving average, and so if you see in this 3 days here, it moved back down below the 30 days moving average. But yesterday was a Friday, December 4th, it moved back up there. So I thought that it could be a good timing for take advantage of momentum here and see if it's going to move up. It could go down, and I'm going to show you that in this other chart I have. But I thought it was a good risk reward ratio to take this call option trade if it really is going to start moving up. So if we go back to this this chart here, you will see that I have a Fibonacci retracement from this point here, which is a low on right before the earnings release, and then moved strongly all the way up to this point here, which is around which is 41.30, and then retraced, tried to bounce a little bit above the 10 days moving average, right at the 61.8, went and touched again this point here, and then move and started to move in this channel, which is actually a little bit long bull flag, but still is a bull flag. So it has not ideally, and just to confirm that it was going to move to the upside again, it would be nice if you want to be certain that this is going to move up to the upside, then probably you wait until it crosses this descending trend line here. I didn't wait. That reduces a little bit the risk in terms of price, but it increments the risk in terms of price movement, right? So it's around the 50%, in between the 50 and 60% fib retracement, and it has a good possibility of moving to the upside, especially how the market has been moving recently, and the expectation that it's going to keep rising. If it does, then the risk reward ratio on this trade could be interesting. So just to realize that what I'm doing here, let me show you the trade rationale. If you go here and put this one in the Theo price mark option, you will see that and I put here 2 weeks of evaluation. So if considering December 18th, if the price moves to 41.48, which is $3.78, then the theoretical price of this option is going to be $4.75. So I bought this one, as you see, yesterday around 3 p.m. Eastern time, and with 41 days of expiration, which is the January 15. Well, yesterday it was 42 days, but it's still January 15. So the cost of this trade is $2.34 or 235 dollars, right? It came back a little bit by the end of the day, so I'm behind $9. And the mark now is $2.25. So if, on the other hand, if it moves, okay, before that, so if I sell it for $4.75, and I bought it at $2.25, I'm making $2.39, around $2.40, $240, right? If if on the other hand I make this evaluation here and say, okay, this one is going down to 36.36, that would be $1 minus $1.34. So that is going to be 36.36, which is the price that I'm gonna try. I'm gonna put the stop for this option, call option, if it's going to not go in the way that I want, right? So it's going to be $1.24 minus this $2.35 is going to be around, $100 that I'm gonna lose, which is a risk that I'm willing to take. Now, it could also happen that it's going to jump to have a gap and then move all the way down here, and then I would sell it anyways. But it's the loss is going to be in between $100 and $235 if I lose everything. So I think that the risk reward ratio is there. I can take that risk, and from there I could see if I sell it, if it start retracing or moving sideways. I will evaluate and see if I want to maintain the stock. A couple of things here. You will see that the MACD, or the MACD histogram is still not moving to the upside. It's a little bit, moved a little bit, and also the stochastics is moving to the upside. So that is not a good sign. That it's not as bad as if it was right here, but it's not really good. The ideal situation would be that I do have a couple of green arrows here, so I can move from and take actually advantage of a good momentum there. But it could happen. We will see. So that is the trade that I took, and I think that it has a good potential risk reward ratio. Okay, that is what I wanted to show you. Thanks.